Today, we're going to explore a critical and complex issue that's shaping global energy markets and geopolitics in 2025. India's surging imports of Russian crude oil and the looming threat of US secondary sanctions under the Trump administration. Now, let's unfold the story behind it. This issue is a fascinating mix of energy economics, international diplomacy, and strategic maneuvering, and it raises big questions about India's role in the global order, its relationship with the US, and the broader impact on the Russia-Ukraine conflict. So let's unpack this deep dive into what's happening, why it matters, and what might come next, all grounded in the latest developments as of mid-2025. Since 2022, India has dramatically increased its imports of Russian crude oil, taking advantage of steep discounts offered by Moscow amid Western sanctions over the Ukraine war. With the G7 imposing a $60 per barrel price cap on Russian oil exports, Indian refiners and traders have been snapping up these discounted barrels, making Russia a top supplier, accounting for about 35% of India's crude imports in 2024. This has been a win for India's energy security, keeping fuel costs down for a billion-plus population. But now, in 2025, the return of President Donald Trump has thrown a curveball. The US is signaling a tougher stance, threatening secondary sanctions or steep tariffs on countries like India that buy Russian oil, especially if those purchases exceed the price cap. Trump has floated tariffs as high as 25% to 50% on nations like India and China, a move that could jack up costs for Indian refiners and act as a backdoor sanction. Some traders think this might be a bluff to pressure Moscow, given Trump's unpredictable style, but the threat is real enough to make markets nervous. Just before Trump took office, the US Treasury hit Russia's oil supply chain hard, sanctioning major producers like Gazprom Neft and 183 tankers, many of which carried oil to India. This shrank the pool of ships available to Indian buyers, spiked freight costs, and put pressure on refiners to stick to the $60 cap to keep access to Western services like insurance. It's a high-stakes game, and India's caught in the middle. This oil trade isn't just about economics. It's straining US-India relations, which are already under stress in mid-2025. Despite being strategic partners, recent events show cracks in the relationship. Take the G7 summit in June 2025, hosted by Canada. For the first time in 6 years, India's Prime Minister wasn't invited, a snub tied partly to tensions with Canada, but also signaling Western frustration with India's neutrality on Russia and its oil purchases. This exclusion stung, as India had been a regular G7 guest, and it underscores the diplomatic cost of India's stance. Then there's the Ukraine war. Trump has made ending the conflict a priority, even offering to broker peace talks in Turkey. But those efforts haven't panned out yet, with Russia demanding steep concessions from Kyiv. India supports peace in theory, but hasn't leaned on Moscow to soften its stance, frustrating some US officials who want New Delhi to do more. The optics don't help. India's oil imports indirectly fund Russia's war machine, clashing with Western efforts to isolate Putin. Add to that trade disputes. Trump's team has called India protectionist over high tariffs and is pushing for better market access for US goods. Talks for a mini trade deal are ongoing, but the oil issue looms large. If India pushes too hard on Russian oil, it risks souring trade negotiations or losing US goodwill, making this a delicate balancing act. Europe's watching closely too, and they're not thrilled. The EU's foreign policy chief, Josep Borrell, has been vocal, criticizing India for refining Russian crude and exporting fuels like diesel to Europe, which some see as a loophole undermining sanctions. Borrell even raised this directly with India's foreign minister, warning that the EU might act if Indian refiners keep funneling Russian oil into European markets. India's response? Once Russian crude is refined, it's legally an Indian product, not subject to sanctions, a technicality that's kept EU penalties at bay so far. But Europe's in a bind. They rely on Indian diesel to ease their energy crunch, so they're hesitant to crack down too hard. Still, the message is clear. The EU wants India to respect the spirit of the price cap, and they're keeping a close eye on where those refined fuels come from. It's a diplomatic tightrope, with Europe urging India to play by the rules without burning bridges. So, who in India is most at risk if the US or EU decide to act? Big players like Reliance Industries, which signed a massive 10-year deal with Russia's Rosneft for 500,000 barrels a day, are heavily exposed. Reliance's global operations rely on Western markets and finance, so they're treading carefully, avoiding sanctioned ships and ensuring compliance. Nayara Energy, part owned by Rosneft, is another hotspot, as its Vedina refinery processes huge volumes of Russian crude and exports fuels to the West. State-owned giants like Indian Oil Corporation and ONGC, with stakes in Russian oil fields, also face risks if sanctions tighten. Then there's the shadow fleet, Indian shipping firms like Gatik Ship Management, which moved Russian oil until Western insurers pulled coverage, forcing them to scramble for alternatives. Indian banks, too, are cautious, routing payments through non-dollar channels and demanding proof that no sanctioned entities are involved. Everyone's on edge, knowing a misstep could mean losing access to global finance or shipping networks. The US and its allies have been sending warnings loud and clear. Back in 2022, US officials cautioned India against surging Russian oil imports, and by early 2025, they were spelling out deadlines, like barring sanctioned tankers after February 27th. Trump himself has nudged India to buy more US oil and gas, offering a carrot to offset the stick of potential tariffs. The EU and G7 allies like Japan have echoed these concerns, urging India to stick to the price cap. So far, no Indian entity has been directly sanctioned, but the signals are unmistakable. Keep purchases below $60 and avoid shady shipping or face consequences. India's complying for now. Ports are rejecting blacklisted ships and refiners are demanding price certifications, but it's a tense dance to avoid crossing Washington's red lines. So, what's next? The most likely path is a diplomatic balancing act. India and the US don't want a full-blown clash. India is too important as a counterweight to China, and the US offers critical tech and investment. Expect quiet deals where India slowly diversifies its oil sources, maybe buying more from the US or Middle East, while the US holds off on harsh sanctions. We're already seeing India's Russian oil share drop slightly from over 40% to around 30% in May 2025, a sign of hedging. Another possibility is creative workarounds. India could use non-Western ships and payment systems to keep the oil flowing without tripping sanctions. Russia's helping by offering deeper discounts to stay under the cap. But there's a risk. If India ramps up imports or flouts the cap openly, Trump could slap on tariffs or sanction a high-profile Indian firm, sparking a diplomatic row and market chaos. A wildcard is the Ukraine war. If Trump brokers a ceasefire, sanctions might ease, and this whole issue could fade. For now, though, expect cautious diplomacy and compliance to keep tensions in check. In wrapping up, India's Russian oil imports are a high-stakes test of its strategic autonomy and its ties with the West. New Delhi's playing a smart but risky game, balancing cheap energy with the threat of US and EU backlash. The US wants India on side but won't hesitate to act if pushed. Europe's frustrated but pragmatic, and Indian companies are walking a tightrope to stay compliant. Diplomacy will likely keep things from boiling over, but the situation's fluid, and the Ukraine war's outcome could change everything.